Hi, everyone. Thank you for joining us today. We have on the call Nisaba Godrej, Executive Chairperson, Sudhir Sitapati, Managing Director and Chief Executive Officer, and Samir Shah, CFO and Head Investor Relations. We'll start with Sudhir sharing his perspective on the business and his last few months in GCPL. Over to you, Sudhir.
Thanks a lot, Pratik. Good evening, everybody. Last week, I was traveling in rural Maharashtra, and I was just driving around the countryside. When I see an outlet, I just ask the car to stop and walk in. And I was really happy to see this small outlet somewhere near between Ahmednagar and Aurangabad, which had Fast Card, which is one of the brilliant innovations of GCPL. And ultimately, the battle for consumer goods in this country is fought in these 6-7 million small outlets in rural and urban India. And to see the presence of a new category there gave me enormous joy. And I guess that's the segue into the title of today's presentation, which is volume growth from category development. So, sorry. Like my trip last week in Ahmednagar, I've spent the last few months getting to know the company. I've traveled extensively in India and in Africa as well in this brief period between the COVID waves that travel was allowed. I haven't yet been to Indonesia, but I feel I've got a reasonably good sense of the company. And there were some things I knew of about GCPL well before I joined, that it's been a company with a very, very rich heritage, very, very good performance, a very strong operating base from which to make a company that is really global scale and really great. And these were the statistics about GCPL that all of you know as well as I do. But what I did see a little bit more in detail, which is what I want to share with you, is the first thing is that after a few rough years, I think this was a terrific performance over the last 2 decades. There was a brief period between 2016 and 20, more specifically actually 17, 18, 19, where volume growth tapered off. In the recent past, a little bit due to base, but nonetheless, I think volume growths have recovered very smartly. One of the things that financially makes me feel very happy about the business is that some of the so-called laggards of our business, which is our Africa business and LATAM business, have turned around. You can see that our Africa business, our Guam business, in H1 growth has been 32%. The EBITDA business of our LATAM business has now moved to 17. Just a few years ago, it had fallen to 2-3%. So two of our businesses that were traditionally not performing that well have turned around. So some very bright spots in terms of business performance. Some really terrific strengths, as I kind of tried to understand over the last few months, the history of the company, I feel like some of the really strong points of this company have its origin in the history of this company, which is 120 years old. I think the first thing that really stands out about GCPL through its history is really the culture of innovation, which started 120 years ago, but as recently as the launch of Mr. Magic or Saniter in Indonesia are great innovations that at periodic interval, the company is able to deliver innovations that deliver great value for the company. Second thing about GCPL, again, enshrined in the DNA, is a quality obsession. And one of the things that really amazes me is that, despite very, very volatile cost scenarios, the company is really obsessed about consumer quality and does not, change consumer end quality under any circumstance. And that's a terrific strength. And finally, a very frugal cost mindset. I mean, this is one of my favorite examples where the wick in our Goodnight, one of our hero products, Goodnight in India, we moved it from a plastic to a biodegradable jute-based wick. And not only was this much better for the environment, and I'll talk a little bit about the environment a little later, but it also reduced the cost by 50%. And I think these are the three standout strengths as I diagnose the company over the last few months. Apart from what I think are standout strengths, I think the company also has some more modest strengths. One of them is it's got strong processes, probably not best in class or best in the world, but certainly more than adequate for a company of our size and scale. I think it's got very good in-market distribution. Again, my habit when I travel into the market is to go unannounced into stores. This was a store that I visited, I think, in Bengal, unannounced, and I was really happy to see, well done visibility in the stores. So I think it's good, solid in-market distribution, though India is probably better than Indonesia, which is probably better than Africa. And even in India, and definitely in Indonesia and Africa, our distribution tends to be somewhat urban-centric. So I would say good distribution, solid distribution, but probably can go deeper into all the countries that we operate in. I think the most important thing, however, when I kind of dispassionately look at the strengths and weaknesses of the company, is that we are really blessed to have a really top-notch portfolio. From a geographic point of view, 4 countries, India, Indonesia, Nigeria, and Bangladesh, are 80% of our revenues. This is a very large part of the world's population, just below a third of the world's population. And these are countries that have consistently grown at 2x the GDP of the world. So these are low-income countries, but growing very fast. And it's not just that we have geographical focus. We have 4 products, and I want to use the word products, not categories, because products are a subset of categories that account for 40% of our revenue, 60% of our profit pool. And all of these are very, very heavily underpenetrated products. So if you take what we call liquid vaporizer, which is the electric mosquito repelling device, or aerosols and household insecticide, or gray coverage in hair, or air care, especially air pockets in bathrooms, just these, these 4 hero products have plenty of space to grow. And to reinforce the point on the space to grow for our core categories and core products, I think the big point that I want to make, and I guess in some ways it's the fundamental point of the presentation today, is that the categories we operate in have non-linear growth. And what I mean by non-linear growth is that the growth of these categories will naturally grow faster than GDP for a long period of time. And why do I say that? Let's take household insecticide, right? It's a category that, some analysts have told me that, have we seen the best years of household insecticides in India? And my answer is, after studying it, an emphatic no. And why I say that is that Indonesia has twice the GDP of India, but 2.5 times the per capita consumption of household insecticide. And Indonesia is a cleaner country than India. So even though sanitation improves, what does happen in household insecticides is that the market moves towards aerosols, which is what happens as countries develop. They move from coils to electrics, from incense sticks to aerosols, from mosquitoes to non-mosquitoes, and you see per capita consumption going up in a non-linear fashion. If you take air care, where I think this non-linearity of growth is best underscored, India with $2,000 per capita income has 7 cents of air care. Indonesia with $4,000 has 60 cents. So when India becomes Indonesia, this category will go up by 10 times. Or if you take Thailand, which is 2x the GDP per capita of Indonesia, you then see that even then it's a non-linear increase in per capita consumption, where for double the per capita income, the consumption goes up by 2.5 times. So it's only after about $8,000 where air care somewhat becomes linear. And in hair color as well, Chile has 6 times the per capita income of India, but 9 times the consumption of hair color. Again, hair color moves as countries become richer from merely gray coverage to what is called hair fashion. So in 3 of our big global categories, underpenetrated categories, there's also plenty of consumption growth to be had as the core markets of India, Indonesia, Nigeria, Bangladesh. And I used India as a specific example, but the story holds even more so actually for Nigeria and Bangladesh. And these are natural tailwinds that we have in growth momentum. And we'll talk about why it's probably better to harness tailwind rather than find new shores and new oceans to sail in. But, this is my wife says that, I really have 2 right feet, and it's true. It's always mortifying for me to go to places where I'm asked to dance. had to embarrass myself in our Africa factory by dancing. And like my dance moves, I have to be honest and say that GCPL, despite some great strengths, has some weaknesses as well. And I think it's a good time for us to reflect on what these weaknesses are. I think one key inability, and I've sort of laid out what the opportunities in the existing products and categories are, is I would say the relative inability to drive category development. I took this photograph in our Chennai warehouse from a placard that was put up in 2010, and it says, "We are in the business of household and environment pest control solutions, and our objective is to accelerate the growth of the Indian household insecticide market." So, category development ultimately is to grow the category. So we acknowledge it. But I do feel that if one systematically studies the category penetrations of all categories across countries where GCPL is leader in, we tend to stop category development at about a quarter of the population. There's a rapid growth of category development in, let's say, 7 to 15%. And then the company tends to sort of plateau off at about a quarter of the population. And there are many reasons why this doesn't happen, but one of the big reasons that we've not been able to develop categories after 25% is there is a fear of downgrading. And it's true that to develop a category at some point of time, there might be short-term downgrading, but in the markets that we operate in and the shape of pyramids of our countries, a short-term downgrading often has to be taken in one stride if one has to really expand the category and build long-term value. So that was one sort of weakness. I think the second weakness in the company, related somewhat to market development and focus, is complexity. And I think it's the one area I would say across geographies and categories that we seem to be lacking. For example, there are plenty of examples here. In Kenya, we have a 60 crore FMCG business with 13 brands. In India, we have 500 SKUs, but on average, we sell 12 SKUs a store. If you look at our goal sheets, we often have 3 or 4 goals, but each goal has a sub KPI so that everything that a person is meant to do is captured in a goal sheet. And therefore, the simplicity and focus that is required to develop categories is often missing. And this leads to 2 problems. One is it leads to, for example, higher cost and higher inventory. One of the things I'm really not happy with in GCPL is that we carry, I think, about 1.5 to 2 times the amount of inventory that we should be carrying in terms of number of days. But more crucially than just carrying inventory, this also sometimes takes away focus from our core business. And this is a core category in Indonesia, no prizes for guessing which one. But this was a category that was growing at, let's say, X%. In FY21, we did a huge whole load of innovations, took money from a core category, put it into new categories. And as a consequence, the growth reduced. In the next year, we did the same, and growth went into negative, and we started losing market share. So this is a classic symptom of when you lose focus from the core to do many new things. You can often lose so much on the core that it can never get compensated by the new innovations and the new categories that one launches. And I guess that is the second consequence of complexity in doing many things. I think having said that, when I looked at a diagnosis of the big wins over the last 5 years, and when I looked at what made us win, and I found 2 wins. One is our dry hair business in Ghana is a jewel. And we have won by focusing on 2 SKUs there, systematically and market developing 2 SKUs. And our soaps business in India has consistently been doing well. And perhaps one of the reasons is we've not, tinkered with it too much. We've been consistent in advertising, pricing, product quality, and both on Godrej #1 and Synthol we won. So if you look at the 2 extremes of the businesses where we've done very well, there's been a focus on the core, not constantly changing things, taking a strategic call and then driving it to its logical conclusion. And that's given us great results. So I guess that gives me a lot of confidence that we do know how to focus. And when we do focus, we win really big. I think the third weakness after market category development capability, a tendency to have a complex business, is that there's inadequate global collaboration. So we are a global business. This is our hair color business. It's at the end of the day, fundamentally one benefit, which is gray hair coverage. But you can see the packaging, you can see the innovations. Every country pretty much does its own thing. And we have a portfolio that doesn't learn very much from each other. In the case that we do, like for example, after, last year we launched Goodnight in Nigeria, and we've had success in Nigeria on Goodnight Power Shots that has really surprised us. So when we take a mix that we, from India and Indonesia, and we roll it out with rigor in some of the other markets that we've now got pretty large scale in. Nigeria is a country where we've got a pretty large scale business in. We actually see a lot of success. So again, like in the case of simplification, when we collaborate, take our learnings and put it to the rest of the world, we see results and see them quickly. And finally, the fourth weakness of GCPL is that while it's a frugal cost culture, frugality is not often the same as being cost effective, and being frugal sometimes is expensive. So our fixed costs, for example, our fixed overheads can be better. I think it's middle of the pack. I don't think it's, and it's middle of the pack because there is a culture of frugality, but probably not a culture of investment. And costs are often a combination of frugality and investments, which is basically what I said, which is our factories don't have adequate automation and CapEx is inadequate. And most crucially, for a high margin HPC business, our advertising and publicity and sampling budgets are significantly lower than both Indian and global peers. And these are all areas that we have been frugal, but actually to be cost effective, one has to invest. And I guess this is the sort of right balance that we have to strike as a company going forward. So to summarize, this is a really good company. And, it's one of the reasons I really joined. It is something, it's a company that I've admired. I've known it for 20 years now, and I've really admired it. And I think it's a superb, robust base we have. And to go to great is quite simple. I think we've already got a few things. I think the most important thing actually is the value systems of this company. I genuinely and honestly believe that in the long term, companies with value systems are the ones that ultimately succeed. Purpose, value, sustainability is really top of the line. The portfolio that we have blessed with is a portfolio which has got plenty of tailwinds. We just have to sail in the right direction, R&D capability and innovations, which is the heart of an FMCG company, is great. The mindset of our employees is frugal, and the processes are adequate to take our game to the next level. So I think these are 5 strengths that we should be really proud of and nurture as we go along. And a few simple things that we have to change. And as I said, and repeatedly, is we got to focus on a few transformative consumer tailwinds. The winds are blowing. We just have to see it and align the vectors. We have to work more collaboratively across the globe. I think the time has come for us to, get the better balance between local agility and global knowledge. We have to move from a completely savings culture to a savings where required and investment where required culture. And most importantly, I would say we got to develop better category development capability. And I would say the fourth one is probably the single most important of the 4 things that we have to do. And what do I mean by category development? Let's take a category which is mosquitoes, right? Category development is basically based on the premise that the biggest driver of value ultimately is penetration. Consumption tends to be a function of economic growth. Consumers tend to consume what they want to as they become richer or as needs come, and it's not easy to mediate consumption. What it is easy to mediate or relatively easy to mediate is penetration. And one has to understand with one's portfolio where one is on the penetration curve. For example, before 5%, and I guess the analogy here is very much like the 4 ages of man or woman. In infancy, firstly, a lot of luck is required. And like our jumbo fast card that we launched recently, broadly to take on illegal incense sticks, which have become a menace in the country, the 2 big drivers are you got to have a great product and people have to know about you. Once about 5% of the people of consumers have tried your product or your subcategory, you really have to drive distribution and trial. And that's where, for example, our aerosol businesses, and remember I showed you the difference between Indonesia and India, is largely to do with the fact that India has sub 10% aerosol penetration, and Indonesia is about 25 or 30% aerosol penetration. So at the phase that our aerosol business, which is a great value driver, we have to drive distribution and trial. We have close to 90 share of the Indian market here. If you then take between 20 and 60%, which is really kind of, again, analogous to the kind of maturity of a category as it becomes more mature, one has to drive relevance. I know about this category, but I don't think it's relevant for me. So you have to find arguments with consumers on why this category is relevant to you, and also to make it more accessible. And finally, and these three categories, which is where bulk of GCPL's portfolio lies, and I'll come to it in a minute, the bulk of the growth potential, the bulk of the turnover, certainly the bulk of the profit pool lies here, needs pretty high investments in advertising and publicity, sampling and distribution. And finally, where some categories like our coils business in household insecticides or our soaps business lies, when you kind of cross 55 or 60% penetration, you have to be efficient. You got to extract cost. You got to give consumers the right price. You just got to be top of mind. And luckily for the GCPL business, the center of gravity of this business is somewhere around 18 to 20% penetration, or maybe 18 to 25% penetration, which is still a very, very high growth phase for this business. So that's really the kind of strategy in some sense. I just want to sort of reiterate that at the heart of our success lies existing category penetration-led volume growth. And I know it's not going to be easy to do this consistently, but I would certainly measure ourselves on success on a medium term basis as consistent double-digit underlying volume growth. And the driver of underlying volume growth, certainly for the next 3 to 5 years, I see a majority of this coming from penetration-led gains on half our portfolio. If you leave our soaps business aside and the dry hair business in Africa aside, the balance 50% are all relatively under-penetrated categories, and this will be the bulwark of our volume growths. In the balance 50%, moderate share growth will give us some amount of growth. There will be some consumption-led market growth where we don't have to do much. And there will be 10 to 15%, I hope, disruptive innovation. And you have to remember that the disruptive innovation of today is the market development of tomorrow. So one must never take the eyes of disruptive innovation, because in fact, very rarely does disruptive innovation give very high dividends in year or 2 years from now. But it's basically that 0 to 5% penetration. You take the category, may not give you huge, sort of volume growth, but that 5 to 20 is what it will do. So therefore, the disruptive innovations that we need for today, so that in the next 3 to 5 year cycle, those become the market development cells that give the majority of growth. And that's really mentally, roughly speaking, where we want to take, how we want to get double-digit UVG. And where will this come from? And where will the fuel for growth come from? Ultimately, we got to save money on gross margins, some of it from mix, some of it because I think we're sitting on relatively low comparators. We got to reduce discounts, both to consumers and trade, because discounts often, mainly subsidize current consumption, and they don't really build categories. We got to reduce our overheads. We got to reduce ATL. And while, we publish ATL as one number, there is a large proportion of ATL which is non-consumer facing, and that needs to come down. We have to significantly increase in media and sampling, in salaries. So even though we reduce overheads, we need to pay top of the line to get top of the line people into GCPL, digital and automation and distribution. So these are the 4 areas of investment. And I hope in the next 3 to 5 years, we get 150 to 200 basis points of expansion of EBITDA as a consequence of the saving and investment. We also have to save in inventory, which is money that is blocked in, frankly, pretty low returning capital, and put it on to automation and CapEx, which will build our business for the future. And that's, broadly speaking, the business model that we're thinking of deploying over the next few years. But I think a business model is all right on paper, but a transformative business plan like this needs a philosophy that all of us in the company collectively believe in. And I feel over the last few months, as I've spoken to and met many people in the company, that there's a strong buy-in for some of the elements of the philosophy that I'm going to talk about. And the 5 elements of the philosophy that I want to talk about is the first principle is, and I'll give 1 or 2 examples, not too many because some of it is confidential, but some examples of what these mean. But the first is less is more and much less is much more. The second is when consumer first and business second. When you have to choose between consumer and business, always choose consumer first and business returns will come later. We have to think local. I mean, there is no such thing as a global consumer. You know, there's a Nigerian consumer, there's a Chilean consumer, there's a Maharashtrian consumer. But we have to use our knowledge of the categories that we know globally to act globally, like the case of household insecticide in Nigeria. Tomorrow before today, which is a version of consumer first, business second, but slightly different, which is if you have to choose between something that benefits you tomorrow and something that benefits you today, prioritize tomorrow. And finally, which is a kind of philosophy which is better from within and different from outside. As far as possible, the team that is going to take us on this journey should largely be from within the company. And I think we've got great talent, and I'm going to talk about it in a minute, within the company. And where we don't have talent, we got to be honest and say we got to get it from outside. But the priority is always better from within and different from outside. Let me give you an example of a few things that we want to do on less is more, much less is much more. One is to have fewer, bigger innovations, right? So think of an innovation. And I think the simple mindset is an innovation should never be mentally construed as something that builds for this year's plan. You got to just keep that out of your operating plan for the year. Your operating plan for the year has got to come from market development, from share wins, from premiumization, etc. And innovation is always, for the future. And that way you don't, remove the plug on innovations very quickly. You're patient. So do a few big ones, a few big consumer tasks, a job to be done, and much fewer SKUs, right? And fewer SKUs is good in many ways. But this is an example of what less is more tangibly means for our business. Obviously, all these are metricized, and we're sort of working with many parts of the company to get this operationalized. But less is more, much less is much more also extends to our philosophy in ESG. I think the company believes, and frankly, this is that environment is not a premium. One shouldn't have a green premium. One's got to have developed products that are sustainable and lower cost, because sustainability ultimately is about taking costs that don't matter. And the magic product which GCPL innovated on is a great example of removing plastic, removing water, reducing transportation costs, and giving a product that is 140% of the cost of a hand wash in the market, and succeeding really well with it. So this is an example of less is more, translating not just to business but also to our views in terms of environment and sustainability. The second one is consumer first and business second. And I think just as GCPL has historically kept quality out of the equation from short-term business performance, I think there's pretty much an adage in the company that regardless of price volatility, quality cannot be touched in order to manage price volatility, which is really laudable. We're going to do the same with media, because ultimately media is also an investment. So we are going to try and de-link media investments from short-term business performance, which is an example of consumer first, business second, and several other things we're going to do. But this is one example that I hope you see in the future, that our consumer investments in terms of media remain the same regardless of what happens to our gross contribution and gross margins in the short term. Think local, act global. On October 18th, I was working, I was taking over and doing a kind of management training stint for a few weeks before that, but I formally took over as CEO and MD on 18th October. And on 18th October itself, we set up a global category team, which we had 3 global categories: household insecticide, hair color, and air care, where we are centralizing strategy, product development, innovation, and brand communication. And for these three categories, market development or category development and brand building, advertising, P&L, etc., will be local. The rest of our portfolio, which is largely soaps and dry hair, are left local because those tend to be local businesses. We have them operating in only one part, and there's no point in kind of mindless globalization. So we have been choiceful about which parts of our portfolio to globalize, and within that, what functions to globalize. The fourth thing is tomorrow before today. Again, many examples. I'm not very comfortable sharing many of them, but one of them I want to share with you is that often consumer goods companies get caught into a today culture because the forecasting process, you forecast for ambition, you're not able to achieve it, and then you, in order to somehow achieve the forecast, you sort of compromise on the tomorrow, often just media cuts. And I think the big sort of change that we're trying to bring in here is we have an ambition. That ambition is not going to change, right? It's double-digit volume growth in the medium term. But at every point in time, our forecasts are always going to be for reality, and our we're going to hold our sales system responsible for delivering on real forecasts, and more senior management responsible for delivering on the ambition, and sort of decouple the ambition and the forecasting. It sounds a bit prosaic, but if you think about it, this is one of the root causes that companies tend to sometimes prioritize today before tomorrow, and it's at the heart of the engine of CPG companies, which is the forecasting process. And finally, better from within and different from outside. I just want to give you a few examples. Again, many of these appointments we made on October 18th, which was really the day that I sort of took over, which is we set up a global category structure, and we promoted Rob Menzies, who worked in Bain, and then he worked in as head of strategy, and then he took the call to move to running the e-commerce business in India. We have appointed him as the global head of categories. We've appointed Soma, who had 18 years of experience in GCPL, as the chief marketing officer on India, again done on 18th November. We took Tom Dawes, who was working for many years, again for 10 years in GCPL on B Blunt, as chief creative officer, as an executive role, as the global head of equity and communication, which basically means he'll be in charge of advertising on the 3 global brands. But we also took a few other calls. For example, Amit, one of our top performers in sales with 10 years in GCPL, was doing customer marketing in India, and the head of sales development left the company for an external opportunity. And rather than recruit someone else into it, and this is really the philosophy on reduction in overheads, we expanded Amit Jain's role to also give him sales development and customer marketing. And that's again to kind of get good people, stretch them more, and it's good for them, it's good for our business. But where we found that we couldn't get internal talent, for example, in Africa, we've had a CFO is an absolutely crucial role. That business is doing a lot better than in the past, but I would still not say that in many things like governance and volatility, it's out of the woods. We got a top candidate, which was Adesola, who's joined us working in many multinationals like Diageo and Unilever, and she's been appointed chief financial officer of our Guam business. So you can see that of the 5 appointments, senior level appointments, 4 were in-house and 1 was really recruited from outside. And that's sort of an example of the philosophy of different from outside, better from within, different from outside. So to summarize it before I kind of move on a little bit more to the short term, is that we have a relatively simple strategy for the next 3 to 5 years, which is we have to get to double-digit volume growth. And I think there are basically no excuses there. The biggest driver for that is going to be category development, and the biggest funder for category development, because category development at start needs investment, is radical simplification of the organization and focusing on the few bets that are really going to work for us. And that's like in a one-page, the strategy for GCPL going forward. And while this is the right thing for the long term, I think we've got to ask the question on what it means for the short term. And in the short term, our business is faced by 2 factors that will affect us. One that is affecting a lot of CPG across the world. It affects us quite a lot because Our Africa business is largely driven or is very affected by crude prices, our India business by palm oil, and our Indonesia business by tin prices. And we have had, I mean, unprecedented is often used, but genuinely unprecedented inflation in three of our largest commodities. While dealing with this inflation, I think the principle that we have used is consumer first, business second. So while our intention is very much in the long term to recover gross contribution and gross margins, in the short term, we have to do it in a way that is right by our consumers. The second thing that we have seen in the past, and I read some articles as well, I think Arnab put out an article, and I've seen it in inflation, I think of 2007, and perhaps it was 2010 end, two inflations that I was closely part of, is that three things happen from a consumer point of view when you have very strong inflation in commodity. One is that pipelines thin down. Often consumption may or may not thin down. People don't generally tend to use less soap because of prices, because bath is pretty inelastic. But you know, there is when you cut grammage, there is grammage lying at our distributors, there's grammage lying at the retailers, there's grammage lying at consumers. So in the short term, you find suddenly volumes go down. So that's one thing that happens. Secondly, in developing markets, we don't see that, or I haven't seen downgradation, but certainly the rate of upgradation slows down quite significantly, and the propensity of consumers to adopt new categories also tends to slow down. So there is, one has to go with one's eyes open on what happens when there is unprecedented cost inflation. The second thing is our Indonesia business. I think the Indonesia business has an environment issue where the market has slowed down and several CPG companies are not doing well, at least the listed ones. But I must be honest and transparent and say that we have also made a few mistakes in Indonesia. I think the longer term mistakes is that we did not invest in our wipes business, which has made it susceptible to competitor attack. But more crucially, which I don't think could have been said in hindsight, so I don't think it is the, I cannot say that this is the fault of the Indonesian team, is that during COVID, a lot of companies across the world took a lot of decisions to enter new categories. Indonesia actually did a terrific job of it. It actually succeeded in building a great brand called Sanita, which was an aerosol disinfectant. However, that did come at a consequence of taking the eye off the core, and as COVID recedes, Omicron notwithstanding, what we're seeing is that the Sanita volumes are seeing sharp falls, and it is not being compensated by the core of our business. I do feel, having looked at the equity numbers, that the problems in Indonesia are not structural because the brands are very strong. But nonetheless, we've got to admit that we're on a relatively weak wicket on Indonesia in the short term. We're taking actions to correcting it, investing behind our core brands and correcting some of these things, but some of these things may take a little bit of time to correct in Indonesia. So what does this mean for us? It's always difficult in these kind of volatile times to give a prognosis on the future, and it's risky to really talk about the future, and I'm sure you'll appreciate it. And therefore, every time we speak to you, we may have to change our views because these are really unprecedented costs. But what it means for us in the short term, which is H2 FY22, is we will see low volume growths. We will see relatively high price growths. We will see high GM dilution. Part of it is because the costs hit us really fast and it takes time to price up. And part of it is because we got to do what's right by consumers. We'll see moderate EBITDA dilution because we're getting cost savings elsewhere and leverage, etc. But this is what I suspect H2 FY22 is likely to look. If I look at, if I look at FY23, and if I were kind of trying to be Nostradamus, I would say that, and herein lies the big risk, is moderate volume growth. Other things being equal, the first half of FY23 volume growth will be tough. I do hope that some of the investments that we're making in market development starts to pay off, and we can move what could structurally be a low volume growth into a moderate volume growth. I feel sort of kind of cautiously optimistic that we'll move it to moderate volume growth. I think we will see high price growth. We will see good GM recovery, may not be all the way from the FY19 levels or FY21 levels, but certainly from the FY22 levels. And we will see moderate EBITDA recovery because the idea is also to invest in media and go-to-market investments. So, very, very broadly, without getting caught up into too many specifics, this is how I would predict these 6 months, and then after that, the next 12 months. That's really kind of what I wanted to share with you today. Thank you very much for patiently hearing me, and I guess we're open to questions now, Prateek.
Thank you very much, Sudhir. We will now begin the Q&A session. People who want to ask questions can do so by either using the raise hand option or sharing their question in the Q&A box. We will wait for a few seconds for people to queue up. The first question is from Percy. Percy, please unmute yourself and ask the question.
Hi, am I audible?
Yes, Percy.
Yeah, hi Sudhir. Thanks for a wonderful presentation, very concise and without jargon. So thank you very much for that. My question is, one point you made was very interesting, that after 25% penetration, we hit a wall in terms of increasing it further. And one of the reasons for that is that we are scared that it might dilute the premiumness of the offering, or dilute the margins, etc. In light of this, I just recall a few innovations done by GCPL in household insecticides, which were done without any regard to sort of worrying about the margins and keeping in mind purely a penetration. So, for example, 4 or 5 years ago, Fast Card that was innovated. Secondly, 2 or 3 years ago, the Power Chip. These were innovations clearly aimed at penetration. The problem is that for whatever reason, it didn't work. So I think, and this is my assessment, that the reason that we in terms of penetration is not we are fearful of the consequences, but somehow the innovations did not work. So can you throw some light on this aspect as to how to make the innovations actually more effective? Because that is where I see the problem.
Yeah, no, thanks, Percy. I think let me just answer this a little generally first on GCPL and get into the specifics as much as I can. I think that the fact is companies have DNAs, and I think GCPL's DNA is in innovations, and we can discuss, innovations succeed and fail for a variety of reasons. And I don't think GCPL has ever been cautious about launching innovations, right? So what you talk about are innovations. They're not in that classical sense market development, which is much more in terms of building relevance of existing products with new consumers versus launching new products for new consumers. So I just want to differentiate, and I feel like one of the DNA changes that we have to make, and the reason that GCPL penetration stop at 25 is that the playbook to get to 20 to 25% penetration is very different from the playbook to get to 20 to 60% penetration, and that's the difference. I think as far as innovations go, I mean, some have worked and some have not. But if you broadly look at the company over a decade, it has generated great innovations, and I don't think that GCPL is held back from innovations which democratize. I mean, I don't think it's a company that only innovates at the premium end. In fact, Magic is a good example of something that has democratized the category. And I think Power Chip and in some sense Fast Card fall under the category of innovations. And maybe those innovations work, maybe they didn't. I mean, Fast Card, for example, I feel has worked quite well. You're right about Power Chip that, there's some lessons to be learned there, but those aren't the examples. I think the right question to ask is, in the case of a liquid vaporizer, which is the core of the categories, what do we need to do to take up the penetration of this category from 25 to 40? I don't know if that answered your question, Percy.
Right, understood. So basically you're saying that you already have the products in order to increase penetration in HI, and you don't need new formats in order to achieve that goal. Is that understanding correct?
That's exactly right. I mean, the penetration has to be done on things that already exist. Maybe you can miniaturize them. Maybe you can reduce the pack size or grammage. A lot of it has to do with just media weights. A lot of it has to do with distribution, but mostly about building relevance, right? Why should someone, I know about electric liquid vaporizers, but I'm using a coil. Why should a lady move from coils to liquid vaporizers? And often the answer is not just about a new product. It's a way of looking at the same thing slightly differently, which really the art of category development comes into.
Right. Second question was, I was a little surprised when you said that basically you gave the example of hair color, and you said that we need to sort of act more globally, and each region is doing their own thing. But in the past, I've seen several examples. Like example, Fast Card was actually cross-pollinated from Indonesia. The sachet hair color was cross-pollinated from Africa. So I thought we were already doing those kind of things. So what is the gap in my understanding versus what you mean?
No, I think, Percy, you're absolutely right, which is, again, goes back to what the company does really well. It's a very product-focused innovation company. So when an innovation works in one part of the world, like the case of Fast Card and like the case of hair color sachet, you're perfectly right that we moved it really quickly to different parts of the world. What we're less good at moving is techniques of category development, communication, positioning, packaging, insights. The softer aspects of category. It goes back to the same meta question, right? Innovation, company culture, double tick, move fast, moves all over. Category development, insights, much slower to move across the world. So, and that's really where I feel a lot more has to be done, Percy.
Got you, Sudhir. That's all from me. Thanks. All the best.
The next question is from the line of Manoj Menon. Manoj, please go ahead.
Hi, team. Hi, Sudhir. Just give me. There's just quite a few questions, but I'll just keep it fairly straightforward. Before that, actually, congratulations on a very, very clear and also I really like the fact that you put the targets on the table. And I do know a lot of investors who like a CEO comes and talks about measurable targets, which is what, and thanks for that clarity. Few things actually. One, when I think about HI as a category over the last 7 years, which has moved into sunset in different parts of the world. So I know that maybe India is like, what are the charts about that's on the sector. But I'm just trying to understand. Is there a technological disruption which can actually happen in HI, which can come from multiple ways? How do we think about that? The reason I'm asking because, as an example, when I think about an HUL, I don't really value the bar soap format, let's say, becoming a liquid. So the inherent assumption is that this can happen, but the brand will kind of. But HI, I just wanted to start from, how do we think about the long term on that? What's your initial observation? Number one. Point number two, should I just go ahead or kind of should I just stop?
Manoj, I think let's take one question at a time because I think your voice is also not very clear.
Oh, okay. Sure. Yeah, I'll stop.
Yeah, no, Manoj, I think there are two questions to your first question. One is, I couldn't fully hear it, but I thought I heard you say that HI is a sunset category in developed markets. But I hope in the presentation, I made it clear that at least up to $10,000, and our top 4 countries are well below $10,000 of per capita income. I haven't studied, to be perfectly honest, countries above $10,000 in per capita consumption, but I'm reasonably sure that up to $8,000 to $10,000, there is first a non-linear phase of HI growth, which is to be had between $2,000 and $4,000, and between $4,000 and $8,000 linear to GDP. So I don't think and a lot of it really comes from electrics, penetration in India low, and in Nigeria, Bangladesh, Indonesia extremely low, and penetration of aerosols, India and Bangladesh extremely low, Indonesia and Nigeria somewhat there. So I hope that answers the question. I think we are, and one of the things that gives me a lot of confidence, and it's probably not right for me to share specific things that we're working on, but I would say that having given you an honest assessment of the company, one of the things that I'm very reassured about the company is the R&D and product paranoia. So I think we perhaps might have been caught a little off guard with illegal incense sticks, but there's a quote unquote word illegal there. But I feel that while obviously everyone says that we're looking at disruptions and we're paranoid about disruptions, I do feel like at this company, the odds are it will be pretty paranoid about HI disruptions. I'm kind of privy to some of the work that's going on here, but probably not right to share because it's specific and future-led. But I feel personally quite reassured, and I guess one should never say these things, but that the odds are relatively low. I don't know if Nisa.
Yeah, I'm not sure, Manoj, what you mean. And are you talking about new technologies in terms of the mosquito breeding and other things that we are seeing? I think, and we do a lot of work with universities, and so we keep on top of these trends and what's happening and what are the new molecules that would come for the mosquito. We're also working with governments on regulatory frameworks so we can move faster with some of these new technologies and new products. And I think we're quite, we're quite confident that if there is new technology or new things coming out, we would be able to bring them to the market first. And I think also in this household insecticides, which we've talked about, so these just mentioned driving penetration for LV, for aerosol, this personal repellents, we talked about non-mosquito as a category to be sort of developed also. So I think we feel quite confident about this category going forward.
Understood. Thank you so much. In fact, that was the follow-up, on which was on the non-mosquito initial salts, and also a different one on air care. What will make these two segments or categories, let's say, start growing at a faster rate, in your opinion? Your initial observations, because it's been an opportunity for a reasonably long period of time. Is it a case of right innovation at the right price, or is there a market which is already there to take, or is it still you're going to just start the innovation?
Yeah, no, in the case of cockroach, and one can think about the penetration curve that I put up, Manoj. In case of both cockroach and air, penetration is kind of in the vicinity of 10%. And really, the things to do here in terms of cockroach and air care is awareness increase, distribution increase, and sampling. That's the playbook for these categories. So, it's not rocket science, right? But you have to put that money, and you got to then find the money on these 2-3 really basics. So there's no rocket science. It's just the fundamentals of category development. And both these categories, are very, very far away from peaking out in terms of growth. I think the best days are coming very soon here.
Understood. And quickly, I'm not sure I missed the slide on home care. Was there a slide on home care? Because if I recall correctly, it was all about your existing categories. And I do understand based on conversations earlier, conference call, etc., that Godrej Consumer does have aspirations in home care. Is there anything which you'll be able to talk about that today?
I think, Manoj, it's not proper for me to talk about our future, but I think the principle I hope I've been able to communicate is that we have to decisively do well where we are. In my assessment, there is huge addressable market in the categories that we are present in. It is not, and at times I'll tell you that, this is a mature category, we got to find new pastures. But I would say that we got to do really well in the categories that we're in. I see a lot of growth potential 5 years later. Once we kind of convince ourselves that we're doing really well in the categories we're present in, that's probably the right time for us to look at new categories and the world outside where we're present. So I would say that's the broad, and I want to just give you a broad guidance because there'll always be, ups and downs and here moves and that moves. But I would broadly say that would be the focus of our business.
Sure,
Great.
thank you. And one very last question on the P&L side, Sudhir, again, your initial observations on, the parts of the portfolio where you're it could be a product cut, category cut, or even a geography cut, where let's say there are opportunities for you to eke out that, extra, from the consumer, of course, even you're dominant in certain parts of the portfolio. Or are there parts where you're overrunning actually kind of, so is there a high standard deviation out here?
Manoj, we weren't able to hear that question clearly, Manoj.
I was asking, are there parts of the portfolio where you are actually, let's say, under earning? When I say portfolio, it could be geography mix, category mix, segment mix, SKU mix. It could be multiple ways of looking at it, essentially revenue mix management, where you're under earning. So is there an opportunity to eke out a little more? Because you did allude to, raising resources to invest in multiple, vectors. So that's one. Or are there, also a case of, parts of the portfolio where you are overearning as well? How do I think about that?
Focused, the 4 categories or the 4 products I spoke to you about, I think we are the best in the world, or, certainly among the best in the world. And so I would say category-wise, we're ready there. Geographically, what has given a lot of joy to me in the last few months is to see the way our Africa business is developing. I think I visited Kenya, which is our toughest business is actually Kenya. And the first international market I went to was Kenya. And I was very happy to see the progress in terms of the fundamentals in Africa. And I see huge potential for growth in Africa in our FMCG business. That was the basis, I believe, when I spoke to a lot of people, that we did the acquisitions in Africa, which is to get scale for our FMCG business. And we've had some hiccups on the way. I truly feel that we're ready for that, Manoj.
Thank you. Thank you so much. Good luck and happy New Year in advance.
Thank you.
The next question is from the line of Vivek Maheshwari. Vivek, please go ahead.
Hi, good evening. Am I audible?
Yeah, Vivek, you are.
Sure, thank you. Hi, Sudhir. Hi, Nisaba. Hi, Sabir. Very impressive presentation. And thank you, as Manoj said, for quantifying some of the, let's say the direction in which the business will go. On that piece, if I can start with, the first question is, you mentioned about something like 150 to 200 basis point margin expansion over the medium term, right? But, the way in which you have articulated your strategy around the advertising and all, does that mean, Sudhir, first the margins will, take a hit? And you did mention about, the near-term pressure from crude perspective, but if one has to factor in, let's say, or one believes that gross margins stay flat, even then I got a sense that margins will go down because you have to spend first, and because that's the right thing to do from a consumer standpoint. So can you just elaborate on that?
Reduce margins first and increase it. That's not our objective, right? Our objective is to invest in the consumer. I mean, there might be a consequence. If there is a consequence at some point of time on margins and we have to take it, we will choose consumer over margins. But certainly, the objective is not to have a hockey stick and say that we're going to reduce margins. And look, the very short term, Vivek, you know what's going on, right? So I don't want to comment on the very short term because there is unprecedented volatility. So once we get better control on the reins of the business, it is not our objective to dilute margins and invest and then grow and say, then we will recover it. But as I said, if push comes to shove and we believe that to do what is right for consumers, it is required, we'll do it. But that's certainly not our objective.
And if I can just add, Vivek, I think you saw the slide, right, which captured, second half of this fiscal year and also what's the plan for FY23. I think what will happen is the quality of profits will be much better. We do expect, ceteris paribus, gross margins to move up because of mix, because of pricing, and also some, very serious cost saving, programs. But we'll also see higher investments in, kind of media, IT, automation. But net at this point in time, with a lot of building blocks visibility, which we have at this point in time, we do feel that FY23 will see margin expansion, and hence it will not be, sort of back-ended.
Got it. Got it. The second question, Sudhir, your impression on, so, numerically you mentioned about the distribution touch points, but let's say, versus Unilever, Godrej has a, lower salience in rural India, for example. So what is your thought process on the distribution, both quality as well as quantity, and what is your aspiration?
See, the quality, I can comment only on India and Africa because I haven't been to Indonesia yet, so it's not fair for me to comment. Let me comment on India because Africa has some challenges and I think it's getting better, but it's a far, India, firstly, the quality of our distribution is good. Our distributors work well. If you go to an outlet, the odds are you'll find a GCPL product. I would say that often distribution is driven by consumer demand and pull. It's an oft-forgotten thing. It's not just a physical question of going to an outlet. If you have pull and, if you have categories that stagnate penetration at 25, it is not fair to expect deep rural distribution. So I would say that for rural distribution in India, I would say the onus lies on a demand chug. The moment the demand starts moving up, then it is correct for us to start demanding from our distribution system to go to more stores. So right now, I would say that even rural distribution will be driven by better quality of market development, which is why I've focused so single-mindedly on that in India. In the case of Africa, Vivek, I do feel it's not about demand. I think it is supply first, and therefore we have to physically go to more stores and get better GTM. And in the case of Indonesia, once I visit, as soon as I can, I'll talk to you about it. So, but that's the context on distribution.
So what will take, just a follow-up, Sudhir, what will take, let's say Godrej to move to more closer to, let's say, half, sales in India coming in from rural? So is it just the portfolio thing or the penetration in rural and therefore, there is such a big gap, or, any thoughts on that piece basically?
It is penetration, Vivek. Ultimately, everything boils down to consumers trying you. Distribution is not the end objective. Distribution is only the via media. So I would say that once penetration starts chugging along, then we have to increase our rural distribution at a faster rate than penetration. But I would still say that the unlock here is rural market development, and that's what I would say is the underlying unlock even for rural distribution, Vivek.
Okay, sure. And last question, just curious, you went to Africa, let's say ahead of Indonesia. Was there any, other than the fact that you wanted to try the moves, as you were dancing in that crowd, but other than that, was there any specific reason of, going to Africa before Indonesia?
Well, the primary reason was Indonesia had a 10-day quarantine and Africa didn't have a quarantine. So I didn't want to spend 10 days. I think much as I love the company, I didn't want to spend 10 days in a quarantine. May not have been the best use of my time. So I was hoping that the quarantine would come down. It came down to 3 days. I was supposed to travel next week. I said 3 days I'll spend in quarantine, no problem. And then the Omicron restrictions came and it's gone back to 10 days. So that's the only reason, Vivek. No other reason.
Right. And just a follow-up to that, Sudhir, so you are Godrej Consumer CEO, and each of these clusters have their CEOs, right? So how does the equation works between you and the respective CEOs and, in turn, the local teams?
Look, this is evolving, Vivek. I think this roles and responsibilities is a fluid thing. I think firstly, we're all a team play here and all of us are trying to win. I think definitely the profit and, for the clusters is the teams are responsible for it. I think one of the things that we will try and do, Vivek, I think that's a better way for me to answer this question, is that to move from a complete independence model to an interdependence model. That's the way the world is working. People are interdependent. And, a category move that I told you is an example of that, right? So it's a good thing for a few people to be involved working on the same problem, to be clear on who takes the final call. So we're also sort of trying to evolve clarity on who decides. Sometimes I might say to the cluster head, listen, I don't agree with you, but this is your call. Or sometimes I may say mine, or sometimes to Nisa. So we're also evolving a model. But I think the principle here is, I don't think it is appropriate for the stage of growth that we are in, or indeed the world that we live in, to have a fully independent model. And I think interdependence is the way to go ahead.
Got it. Thank you very much. Wish you all the very best. And Love the double-digit volume guidance in the medium term outlook. Thank you and all the best.
Not the outlook, it's the
Ambition.
Yeah.
It's ambition. Okay. All right. Thank you.
The next question is from the line of Arnab Mitra. Arnab, you want to kind of go ahead?
Yeah. Yeah, hi, Sudhir, and thanks for the brilliant presentation. My first question was on this market development. Is it a very long-term game in the sense that if you start doing market development in some of these categories, is it going to take many years before it starts showing up, or is in your experience this something which starts moving the needle quite fast?
I think, Arnab, to answer your question, if you do it right, it should move reasonably fast. It doesn't move in the first quarter and second quarter, but it will move within a year. The trick here, however, and I must sort of, is you have to get the market. See, category development requires at the end of the day a trigger for category development. So, often the answers are already there. So what takes time sometimes is getting the right trigger for it. But once you get the right trigger for it, it doesn't take a huge amount of time, Arnab.
Okay. My second question was on your Africa business. You visited the business also. In your perception, is it a good FMCG business in a classical sense, which has pricing power, which has brand equity? What's your perception of the quality of that business?
See, when I say so we have two businesses in Africa. One which we call the dry hair business, which is, I think it's a good, solid business with high market shares, scope for efficiency. One of those categories which I think are 60% penetration plus. And I think there's a lot of growth opportunity in our dry hair business, which is hair extensions, which is still the majority of our business. But what I was very enthused with when I went to Kenya was in the FMCG business in a classical sense, which is driven by our US portfolio that we acquired, especially Mega Growth and TCB, which are in the wet hair segments, which is basically treatment on the hair, which is non-shampoo, but leave-in conditioner, sheen sprays, etc., etc. I was very, very enthused by the strength of the brands, the rapidity of growth, the profitability of that portfolio, the under-penetration, and just the sheer scale of growth that's possible in wet hair. I was also enthused by the opportunity for household insecticides in Africa. I do feel that given the prevalence of mosquitoes in Africa, the penetration and consumption of household insecticides is significantly lower than what it should be. Let's take even Nigeria, right? Like India has, if I'm not mistaken, I had put about 60 cents is the consumption of household insecticide. Now, Nigeria has a similar kind of weather, similar per capita income, but it's got 2/3 the per capita consumption of household insecticides. So on both fronts, I see it today on wet hair, which is very exciting in Africa, and I see it tomorrow on household insecticides, which I'm assuming what you mean by the FMCG categories. And we've got a dry hair business, which Dharnesh is doing a great job of driving efficiencies, taking up margins, doing the fundamentals right, simplifying that business, etc., etc.
Okay, thanks. And my last question was actually just going back to what Vivek had actually asked. So if you have to get money out for investments, it still looks very difficult that you could do this without sacrificing your current high margins. Or do you see there are scope for significant savings which can be plowed back? Because GCPL has already been doing a pretty strong job at cost savings in the past.
No, I mean, I must be honest and I say I do feel that there is potential. I think GCPL has done a great job on cost efficiency and frugality, but I do think that there are fundamental areas, largely in the area of simplification, which will yield cost. But as I told you, Arnab, I mean, our priority is to get the consumer investments. Our hypothesis is we'll self-generate it. But if we don't and we have to invest, we'll invest in it because, we know we're a HPC business with low penetration, high margins, and the return on investment in the future will always be good here. So, I mean, there's no question of going into the company and saying, here's margin relief, let's go and grow the business. That's not, that I would say would be, from my point, a miss, and I would not be happy with it, but I would be even less happy with lower volume growth. So if I have to choose between the two, I'd definitely choose volume growth over EBITDA reductions. But the going in position is have modest EBITDA improvements and relatively fast volume growth, with the caveat, Arnab, which you yourself had written, that the next 6 to 9 months will see some fundamental headwinds on volume growth in CPG across the world.
Okay, thanks so much, Sudhir. All the best.
Thanks, Arnab.
The next question is from the line of Richard. Richard, you want to go ahead?
Hi, Pratik. Thank you. Just want to check, can you hear me?
Yes, perfect.
Okay. Hi, everyone. Sudhir, thanks a lot for the presentation. Just want to play devil's advocate out here, right? I mean, if I look at Godrej as a brand, I mean, it's a great Indian brand. But if you look at it from an FMCG brand perspective, especially when we are talking about premiumization, do you think that there's a bit of a back foot involved out there, considering that Indians and also I would guess consumers across the world have this fancy for all these for all MNC brands, right? I mean, since that is what we've been hearing about from friends overseas. So do you think when premiumization as a trend plays out, the Godrej brand could using the Godrej brand to do to premiumize the GCPL portfolio could put you on a little bit of a setback?
So the answer to that would be no. And we also have a choice at any time not to brand with Godrej, like we did with Rebount, which was a very sort of high-end hair care brand. But I just want to point out, actually, we do have like a real estate business where we sell apartments in the crores, and all research that we've done actually in GCPL, even on more sort of premium brands that we have developed, and when we show consumers the brand with and without the Godrej name, the Godrej logo in itself gives us a lot of advantage. So I don't think GCPL is tied in any way to doing premiumization. And we always have the choice not to use the Godrej brand, but our understanding is that it gives us quite a lot of strength.
Okay, thanks. And second one, if I may, Sudhir, I remember you talked about Indonesia very emphatically, even in the Q2 call, right? And you alluded to certain missteps that have been taken, internally. And you talked about that even today. And one of the aspects you talked about was about, the wipes category, where you said that the team haven't invested enough. I mean, considering the fact that you brought up this topic, so many times in the two interactions that we had, can you elaborate a little more on, on what do you think are the low-hanging fruits out there that could be plucked, and what are the long-term gains that one can look forward to out here?
Sorry, Richard, I couldn't fully follow your question. I heard something on our wipes business and what my diagnosis in the wipes business is. What was your second question?
No, so my question, Sudhir, was that my main question was that since you talked about so much about Indonesia missteps, and you referred to that even in the Q2 call, and then you talked about it today. I just wanted to get your initial view on what do you think are the real low-hanging fruits out there immediately, and what more could come by as you correct the missteps.
Is a very, very rock solid business going through a rough weather in the short term. And I to compare with our Africa business, which is on a correction mode, but I wouldn't, like our Indonesia business, and I haven't been there yet, from what I see, what I hear, when I look at the numbers, is a top-notch business with a few very high margin categories and great positions that we have there. I mean, I think the misstep that we made in Indonesia strategically, I guess, is we got to reorient ourselves in Indonesia, like in India, to category development, Richard. It's still only a $4,000 per capita country, and between $4,000 and $8,000, many of the categories that we play in have non-linear growth, and we just have to expand categories. So even in Indonesia, the household insecticide aerosol category has a penetration ballpark of 25 to 30. Our air business, has 15 odd penetration. So there's plenty of penetration gain to be had in Indonesia. And that's where we've got to reorient ourselves in Indonesia. On Me Too in particular, I would say, and I hope a year from now, because I can say this with as much candor when, I make, as I definitely will make mistakes in the future. And I hope in these forums I can admit it freely. But on hindsight, it's quite clear that it was a category that we had leadership, and we should probably have, invested more in keeping the equity strong in Me Too. And that's a lesson for us all over, that just because competition is weak, and someone asked the question on disruption, if one doesn't invest in a category, even if one doesn't find obvious growth drivers, like it may not be that obvious in baby wipe what the growth driver is, let's say, compared to household insecticide or air, one's got to continuously think of the growth driver and continuously invest. And I guess that is the broader misstep, is not to be complacent in categories and to sort of, make more cash than required from them.
Thanks, Sudhir. Last one, if I may. Do you see M&A playing any role in your growth template, or do you think that can be put off the table for at least, let's say, 5-6 years?
Yeah, I mean, listen, I think the thrust of this presentation was to, I hope, give you confidence. Certainly, we feel very confident. I do, that there's a lot of very good growth that we can get if we focus on what we're doing now and get better at what we're doing now, right? So clearly, it's not like a phase where we're going to be looking at lots and lots of M&A. But if there's a good opportunity that comes our way, in categories that are existing or allied, I guess we will definitely look at it, and we continue to look at it. So I guess that's the qualified answer. I don't know.
I think our strategy, which we've talked about in the last few years, is this high focused on double-digit organic growth. Sudhir's come and defined it also as underlying volume growth has to be in double digits. So I think that will be our main focus. But M&A and having a playbook is, we definitely have an M&A playbook. Like I've said before, it will be more focused on India and Indonesia versus Africa for the moment. So I don't think there's much of a shift on that strategy.
Thank you very much. Wish you all the best.
Thank you, Richard.
Thank you.
The next question is from Harit Kapoor. Harit, please go ahead. Harit?
Yeah, am I audible?
Yeah, audible now.
Yeah, good evening all. So I just had 2 or 3 questions. So first question was on the on the penetration side. So I just wanted to understand, would we require format innovations to drive your agenda of penetration going forward? You do believe that the current formats across categories are good enough to drive sampling and hence penetration?
Yeah, no, Harit, I won't answer that specifically, but I'll answer it in general terms, that sometimes format innovations are required for penetration increase, but more often than not, what is required is getting a consumer trigger for existing formats and building awareness and distribution. It's a more general answer, but that's how it is, I guess.
Okay, got it. The second question was on the global category head strategy. Some of the peers also run this strategy, given they have global businesses. I just wanted to understand, in certain cases, it also leads to, a slower execution, on local innovations on ground. So how do you kind of, guard against something like this?
Against this. The first is, we don't globalize everything. We only globalize what is naturally global, right? I mean, a mosquito is a mosquito in most parts of the world, right? So it's a naturally global category, and therefore what is not naturally global, like hair extensions, continue to remain local, and it's 50-50 for our business. Then within that, we have also defined the guardrails in terms of what is global and what is not global. Now, really innovations which are breakthrough, and I'm one of those guys who's in the camp of breakthrough innovations, tend to be global in nature. They tend to come once in every few years. They're not, generally, so they don't come like, speed is not the important thing in innovations often. It is really a deep consumer understanding and really a breakthrough product. There's no reason why that can't be global. what can be, again, insights and triggers, as I said, tend to be global. So why does a mother use a liquid vaporizer, or why does she use an aerosol? The reasons tend to be pretty global. So these two things by nature tend to be global, but many other things tend to be local. Pricing tends to be local. The amount of media that you spend tends to be local. Where how to sample and how much to sample tends to be local. So in the marketing mix, what tends to, over a period of time, be global, we have globalized, and what tends to be local, we've localized. But finally, hey, this is a small company, right? It's a relatively small company with a few of us are working closely together, and ultimately there's no substitute in these kind of things to pick up the phone and say, hey, I'm having this problem and let's solve it together. And I guess, whatever structures you form, ultimately what matters is the cohesion that we have in the top team, that we're in this together and solving it together. And I feel like when that is done, when that cohesion is there, and when people in a team play for each other and not just with each other, I think then magic happens, and the best of global and local come. And that's a cultural problem to solve, but that's at the end of it, the heart of the answer.
And I think in your less is more sort of philosophy, at least what I've seen in the last, few months, GCPL is moving faster than it's ever moved, correct? So I don't think actually the question is global versus local, but is it, it's focus, clarity, and agility, and, the choice making around that. So I actually think this change is going to be very powerful for GCPL. And, we talked about, someone mentioned this cross-pollination of hair color or a fast card. I know how slowly some of that moves. So I think, say, even HI in Africa, in this new structure, what we do in Indonesia and India, it will actually move much faster than in our previous model.
Got it. Thank you. The last question was on the volume growth for FY23. I mean, you mentioned moderate volume growth, but I just wanted to understand, is that a function of grammage reduction led actions that you've taken, or is it more a function of the demand in the market, or is it a function of the fact that some of the initiatives that you're taking will take that kind of time to kind of develop?
No, listen, I mean, the reason I said volume growth is we know what we've got stacked against us, right? There's nothing to hide in the inflation that we have. And as I told you, what tends to happen when there's high inflation is that actually volume is not moderate, it tends to be low. I'm betting on the fact that a few of the market development, not all, and there'll be failures. And as we have failures, I promise we'll share it transparently, but a few of the market development activities that we've planned, if they work, I think they will take us to kind of moderate volume, and moderate volume in consonance with high pricing and moderate EBITDA could be pretty good earnings next year.
Okay, that's it for me. Thanks and all the best.
Thank you.
The next question is from Avi Mehta. Avi, please go ahead.
Hi, am I audible?
Yes.
Thanks, Sudhir, for sharing the broad framework for the strategy. I wanted to understand the management structure for this. Whom would the global category teams report to? Is this going to be, they would kind of bring out innovations for each of the geographies, and the geographies would choose from them? Could you kind of share a little more detail on that, please?
Yeah, the head of the global categories is Rob Menzies, and he sits on the GCPL MC, and he reports into me. And for the global categories, both innovation and communication resides with the categories, and that's his responsibility.
And R&D was already global.
R&D was already global. Sorry, I didn't add that because it was already a global category. So in some sense, innovations were already global. Marketing was not, and maybe that's what Nisa said, which is we had products, but we weren't able to roll them out as fast as we can. And in some sense, this global category is really a global marketing structure, and R&D continues to be global as it is today.
So essentially, instead of localizing the product, I mean, there is so much fruit or so much wood to cut in kind of getting the product across global channels. This is why you've kind of chosen the structure. That's the right way to look at this.
Yeah, I mean, listen, if there's a local need, the consumer is local and the global teams need not all be based in Bombay. They can be based anywhere in the world, right? So they have to work with local consumers. And if we find that there is a local need in a country, we will meet those local needs, even if even if the global team works on it. I think the bet is that for these three categories, they tend to predominantly be global. They tend to have global needs, and I mean, our general principle is adopt, adapt, and only then originate. I mean, that's the efficient way of doing it. Somebody was asking the question on how will EBITDA come? I mean, this is how it will come when we adopt what's best in GCPL. And when it doesn't work, only then originate. But we're still open to originating locally if the need requires.
And I think what Sudhir said in terms of market development not being as strong as it could. So if I take, say, a power chip in India, is my insight on market development strong enough? Maybe not. And I need to, and am I investing enough? No, for that penetration. But once I'm getting it right, am I able to take that whole mix to Nigeria and Indonesia fast enough? So I think this in the core categories which go across the globe will give us a lot of speed, focus, and agility.
Perfectly clear. Just on the margin front, sorry for reiterating, but would it be fair to argue that contribution margins would probably see an impact, but the SKU rationalization and cost savings will allow us to offset that and, even drive higher media investments? Is that the broad playbook?
No, Avi, I think that gross contribution margins will certainly contract in, as I mentioned there, in H2 FY22. I mean, there's no secret in that. I think after that, we're sitting on a relatively low comparator, and we may or may not. Certainly, the intention is, our intention is to price sensibly with consumers. We're faced with cost inflation. We have the ability in the categories, we have the equity to pass these on, but we must do it judiciously and in a way that is consumer sensitive. In my reckoning, if costs remain at the level they are, or even fall marginally from where they are, I don't think they will. And you never say never in this kind of thing, but if they don't go up significantly from where we are today, I would bet that we would be gross margin positive next year versus the relatively low comparator of this year.
Sorry, just to clarify, I didn't mean this year. I was looking at it more from a structural basis. Margins will move off as we focus more on volume and distribution expansion. That was where I was coming from. And I'm comparing more with FY 19-20, where we had a more normalized basis.
Yeah, that may be the case, Avi, which is we may get back to normalized GCs and get very moderate GC. Once we get to the normal normative, as I call it, gross margin levels, which we are not right now at, the improvements in gross margin will come primarily from mix and simplification rather than anything else. So you're right on that front.
Perfect. That's all from my side. Thank you very much.
Sudhir, we have a few questions in the chat box. I'll try and take them. The first one is around thoughts on rationalization of the geographical footprint for GCPL.
I mean, listen, we're present. I mean, again, it's not proper to specifically talk about geographies, but I would broadly say that we are present in fast-growing D&E markets with very good presence in the categories that we operate. The only real exception to this in some sense is the US market, but the US market plays a very important strategic role, as I mentioned, in terms of, because our business in the US market is actually a focused business on black hair. And that plays a great role in innovation and market development of our wet hair portfolio in Africa. So that's the only one that somehow sticks out. I don't know if, Nisa, you want to...
Yeah, I mean, it's not a developing market, but I think the consumer and category still has quite a lot of scope, even in the US.
The second one is, any thoughts on getting new categories in India or entering into newer categories in India with your experience?
Well, I mean, we're constantly studying and looking at new categories, but I would, put the maxim saying, first do what you do well. I mean, it's the easiest thing to enter new categories, right? And And the right way to frame the problem is not new categories to answer, because that frames it from our point of view. I mean, if there are new unsolved problems that we have the capability of solving, we'll solve those problems, whether it comes in our category or other categories. I would still say, first prove to ourselves that where we are, we can do better than where we are, and constantly look out in the ambit of adjacent categories that we play in for unsolved problems. So I would put this as entering and solving unsolved problems rather than entering new categories. I just feel it's a more consumer-friendly way of phrasing expansion strategies.
Got it. The next one is around HI. So the last few quarters have indicated a shift in consumer preference for the burning formats in HI, cards, sticks, etc., which provide quicker gratification. In this context, how should one think about the outlook for premium electronic formats?
Yeah. See, listen, I mean, I don't know about the last few quarters, but the last few years, certainly illegal incense sticks have done well in India. And our strategy to combat it, firstly, it's illegal. So it's a regulatory issue, and we've got to combat it there, because it's not good for the health of our children, right, to use illegal incense sticks. But we have launched our Jumbo Fast Card, which is an innovation that is doing very well, which it competes at the heart of incense sticks from a value point of view. But if you actually look at the electrics, it solves many of the problems that incense sticks give birth to. It doesn't have smoke. It is actually on a cost per night basis very economical. It has a high fixed cost. So I guess if your question is what is the answer to compete with illegal incense sticks in the household insecticide market, A, regulatory and consumer awareness on the ill health of incense sticks, B, through product innovation, which is a Jumbo Fast Card. And it's a very, again, it's a great innovation, but it needs stamina. We got to kind of be at it for several quarters, several years before consumers change habit. And 3, which is market development on liquid vaporizers, which are not bad economically. You just need to, to communicate to consumers the safety and economy benefits of. So that's a good answer, because it encapsulates in one sense many solutions to the same problem of illegal incense sticks.
Thanks, Sudhir. The next one is the winning in many India's exercise was one of the key vectors driving growth in many categories in your previous organization. Do you think the time is ripe for something similar at a larger scale at GCPL? Which of GCPL's domestic segments, in your view, offer maximum potential for these regional strategies?
Okay, there are 2 questions here, and again, I'll answer them, in a simple, straightforward manner, which is, if I look at the drivers of GCPL growth, which is market development of a few core categories, I feel that they are not just pan-India, but pan-global in some sense. There is, of course, the soaps category, which is very much a local category, which GCPL has actually been doing a fantastic job of winning in many India. So, and I think it's succeeding, and it's doing a really good job of winning in many India. So I'm not quite sure that in household insecticides or in hair colors, there is a necessity to have, or air care, for example. I'm not quite sure that bathrooms are different in the north of India than the south of India. So I'm not sure of the full relevance. There might be at the margin things here and there, but I wouldn't say that that's the thrust for market development.
In your overall view, Sudhir, which of the categories are closer to your heart, or you expect lesser work to be done and kind of faster progress to be made? Any thoughts around that?
Let me not be diplomatic. Let me just say that I feel like the category that has the greatest potential, but this is a feeling, right? And this doesn't matter much, because what happens will happen. I certainly feel, when I look at the numbers and when I look at the products that we have, that the air care category in India is certainly at takeoff. I mean, the HI category is the core of our business, and there's plenty of growth. But I do feel like, if India's per capita consumption is 7 cents and Indonesia is 60 cents, at doubling of this thing, you can just see where a lot of it will come. But that's just a personal view on it. I think all the categories that I spoke about have lots and lots of growth potential.
If the participants have any further questions, they can either type in the chat box or raise their hand. Next question is from the line of Shirish Pardeshi. Shirish, please go ahead.
Yeah, hi. Hi, good evening, Sudhir. Am I audible?
Yes.
Yeah, so that was my previous question, which I asked, but since I'm a little excited, thanks for your detailed and candid presentation. What I wanted to understand, I mean, from the past company, your understanding, and when you put that framework for GCPL, what I wanted to understand, where do you think a quick win, and why I'm asking this question, because you alluded saying there was a fast innovation which was happening, but there was no focus which was there. Maybe what I misconstrued, saying that the innovations are going to be more on the mass end and less on the focus, or is it that the innovation pace at which we have grown will be very well measured?
I do think that the biggest trigger for growth is category development, and it will be driven by increased investments in above the line, which is communication and sampling and then distribution. But that is the simple answer to your question. Shirish,
Okay.
does it answer your question? I couldn't follow your second question. I understood your first one on what do I think is the short-term drivers, category development driven by ATL, but sorry, Shirish.
No, what I was saying that the pace of innovation which we have seen, it was much faster. But what I gather from your presentation and your view is that there was focus which was done from the short-term perspective, but not long-term perspective. So do you really think the whole GCPL world has to think the category development is one of the big work which we need to do?
100%. I think that is I think the two big shifts are we've got to focus on blockbuster innovation. So it's not doing a little bit of many things, it's doing a lot of a few things. I mean, Jumbo Fast Card is a good example of what I think is a blockbuster innovation. We've got to be patient. You'll always have roadblocks on the way and, speed bumps on the way, but we got to be, invest there. And to this, we have to add the belief that it is not only innovations, but companies can grow with category development as well. That's very much a cultural thing that we've got to add to the company.
And I think culturally also, Sudhir, one of the things Sudhir's bought is I think we've been good at innovation when it's been a blockbuster the first year and not so good, especially on some of the bigger stuff when we've had to do this market development or more sampling or put media in for a few years. So I think this, invest for tomorrow will help both category development and innovation at GCPL.
I got, Nisaba, what I'm saying, but Sudhir preempted my thought. Is that the culture, which of course you are bringing a different culture put together, but the pace of innovation and the culture behind that, try and do quick fix for the short term and don't look at long term. Is that the quick win you are trying to work?
No, I don't think that is the quick win, Shirish. I think the quick win is a belief in the company that category development drives value, which is there. And that category development happens with increase in investments in communication, sampling, and not just new products. So yes, I mean, in the sense that new product is one driver of growth. And often, if you think about it, right, a lot of people speak a lot about new products, but the really big new products take many, many years of patient hard work. And you got to really slog it out at new products, really have evangelists for it and so on and so forth. And that there's a lot of growth to be had in what's already existing. I guess that is certainly something that I think the organization is also kind of buying into, and I think there is increased belief in that.
All right. Thank you, Sudhir. Thank you, Nisaba, and thank you, Samir. All the best.
Thanks. Thank you.
Thanks.
The next question is from the line of Krishnan. Krishnan, please go ahead.
Yeah, hi, Pratik. Can you hear me?
Yeah.
Yeah, thanks, Sudhir and team. Very detailed presentation and fairly candid answers. Sudhir, my question is regarding the skin cleansing category. You were closely involved in your previous job in a category like detergents, where premiumization was very significant over the last decade. My question on skin cleansing is in three parts. What, in your view, has delayed premiumization in skin cleansing? Has there been missed opportunities by the leading category players in the past? And lastly, does COVID as well as particularly e-commerce give a significant opportunity for increasing premiumization in skin cleansing?
Let me answer this question not from anybody else's perspective, but from GCPL's perspective. I think from GCPL's perspective, we have two really good brands, Godrej No. 1 and Synthol. Both these brands have been doing extremely well over the last several years. And it has been doing well by being very, very steady there. It has not, and it has been winning consistent market share. So I would still say that the role of our skin cleansing business in our portfolio is to beat and to gain some amount of share year on year and run a very steady, efficient business. Going back to the chart on category development, this is a category that has got 97, 98% penetration. There's no real category development to be done here. I would say that our number one growth driver is on winning moderate share and growing with the market. There are opportunities that are there, which I probably may not want to speak about in premiumization. And as and when we do something there, I'm sure you'll get to know of it.
Thanks, Sudhir. Just a final question on the e-commerce part. Does this open up a significant opportunity for category premiumization? A competitor of yours actually indicated that there has been about 18% compounded annual growth rate in cleansing products over the last 5 years compared to flattish growth for the category.
No, I mean, look, the e-commerce business is firstly, let me give you a lay of the land of our e-commerce business, right? I think our e-commerce business in India is very good. And I think our e-commerce business in the rest of the world has a lot of scope for improvement. I think our principle on e-commerce is primarily our principle on e-commerce is like what it is for every other channel, which is to be available, so that shoppers can buy what they want with great ease. And I think in India, we're doing a really good job of that. I mean, I just want to clarify one thing, which is the meta narrative for us is not premiumization, right? So there's an implicit assumption even in Richard's question. And obviously, as and when there are tactical opportunities for premiumization, we will use them. I mean, like, for example, in dry hair in Africa, there is a narrative on premiumization. In soaps in many parts of India, there is a narrative for premiumization. But our predominant narrative is one, A, of category development, B, one of moderate share gain, and C, of innovations, and probably D, of premiumization. If I were to kind of tell you which way the cookie crumbles on premiumization, just to put it in perspective on what's our big drivers for growth.
Very clear. Thanks, Sudhir.
The next question is from the line of Prashant Kothari. Prashant, you want to go ahead?
Yeah, hi, Sudhir. Excellent presentation. I just wanted to understand on the e-commerce part. I mean, how do we see that as maybe also as a risk? Because we have certain categories like HI or air care, where there could be, let's say, competition from private labels from the e-commerce giants, internet giants. How do we see kind of risk of commoditization playing out in some of our business lines?
Yeah, no, I mean, if your question is commoditization from private labels and e-commerce, look, the problem of commoditization in India is not a new one. Maybe the players are different, but there have always been competitors who, if you don't build functional and emotional distinctiveness on your product, you get commoditized. I mean, the Me Too example I gave you is an example of us not investing. And therefore, the answer to commoditization, I don't think there's any new phenomenon here. I think it's always been there, and except that the players are different. And the answer is the same. One's got to have better products that consumers are willing to pay more for, and one's got to have brands that consumers feel like being part of. I mean, if you do these two things, you mitigate commoditization risks regardless of who the commoditizer or who the competitor is. And I guess that's what we have to do regardless of what's changing in the market.
Right. Okay. Thank you. And the other question was on the soaps business, and obviously you have the advantage of looking at Godrej also from outside as well as inside. Now, I mean, do you think that the business is under earning versus what it should? And one risk that I have in mind is that as you drive these efficiencies and maybe margin gains in future, we start losing share. I mean, this is what maybe Unilever had when they were too focused on margins, and in that process they lost some bit of share in the last 5-7 years.
I mean, look, our soaps business is doing really well. And one of the good maxims in these things is, there's also a very good strategy in business, which is kind of do nothing, which is it's doing well, you continue doing with it. So I have no intention of tampering with what's going well in many parts of our business. Soaps is one of them. And it has a record of share gain doing what it's doing. And I see no particular reason for that to change. And if it changes, we'll correct, as and when it comes. But neither do we want to fundamentally, we don't want to change anything fundamentally in the way we're running our soaps business.
Okay, fine. Okay, thank you very much.
So there's a follow-up question on the line of Percy. Percy, you want to go ahead?
Yeah, hi, audible?
Yes.
Okay. So, Sudhir, you've been very clear in saying that the main growth driver is going to be market development and increasing the size of the category and driving the current formats. And you also mentioned that the main tools you will use to drive that is higher sampling, more advertising, and then when the demand comes up, higher distribution. So sampling and distribution, I understand. But on the advertising part, what I wanted to ask was that is this just a case of increasing the advertising spends, and let's say instead of having a consumer who's watching 10 spots, let's say increase the spend so that he watches 15 spots? Or do you think that basically you need to communicate some kind of benefit or advantage which has not been communicated earlier? So what I'm trying to say is that, do you think that the problem is that you have a clear message and a clear reason for the customer to use, which is not reaching, that message is not reaching the consumer? Or do you think that maybe the message itself is not attractive enough, although the product may be, and you need to actually tinker with the message and make sure that the customer understands why this product is necessary for his life?
No, thanks, Percy. I think increasing advertising is shorthand for saying increasing media reach. So the last thing one should do is to increase frequency. Across many of our market development categories, we still see a lot of potential to reach more consumers. Even now in India, TV tends to be the predominant medium once you go after the top 25. And remember, we're talking of going beyond the 25. So, there's India TV penetration is still, when I last saw it, between 70 and 75%. Within TV, you don't reach everybody, lots of light users. So one has got to be very clever, not in spending more money for the sake of spending more money, but in terms of reaching more consumers with the message. So I think that's point number one. And that is the big trigger for market development, that I'm a rural consumer and I haven't heard of Goodnight liquid vaporizer, and I hear about what it does. And secondly, in some cases, it is indeed to tweak the message to make it more relevant to the next 75% of consumers. So I probably don't want to tell you which is what right now in our portfolio, but it's a combination of media reach increase and changing the message where appropriate. It's not about making someone who's seeing 10 pieces of advertising on our product seeing 15. If they're not buying you after seeing 10, they won't buy you after seeing 15.
Sure. So that's on rural, where basically you don't. Hello. Yeah. So what you're saying makes sense on rural, where basically the customer hasn't heard of the product and you're increasing media reach. But in urban, even urban, there is scope for penetration growth. So especially in things like liquid vaporizers. So, what do you think that penetration in urban has not increased? I mean, everyone has heard of this. Everyone has a knowledge or awareness of what this product is, but yet certain people don't use it. Does it mean that they really don't see any benefit to using this? And if that's the case, then how do you solve that problem?
Yeah, no, I think firstly, I think it's an assumption that everyone's heard of it. So when I go and meet people, may not be in Bombay and Delhi and all, but if you go to smaller town India, even their TV reach, the presence of TV doesn't mean the reach of the advertising, by the way, because very few TV plans reach more than 55% of people, because there are a large number of TV users who are very light users. So it's an assumption, firstly, that everybody's heard about it, but you're absolutely right that if someone's heard about liquid vaporizer and is not using it, then you have to find what I call the category development trigger. And we have some ideas, which again is probably not appropriate to share now, on what is going to make someone who knows about liquid vaporizer, who's using coil, but is chosen not to use liquid vaporizers, what's going to make her shift to liquid vaporizers? That's very much a very, very important question, Percy, to answer. And I hope in 6-8 months, some of these questions we'll be able to answer. And the only reason I don't want to share it is we don't want to share plans before we put them out into the market, right?
Right. That's all from me. Thank you.
Thank you, Percy.
The next question is from the line of Richard. Richard, you want to go ahead?
Hi. Thanks for another opportunity. Sudhir, I wanted to check this with you, right? I mean, if I remember a section from the book, where you talked about, at HUL, when you're talking about a new product, I think you mentioned out there that the price of the product is decided in advance. The profitability that you seek to achieve from the product is also decided in advance, and therefore the balancing figure is really the cost, and the team has to do whatever it has to do to put in the costs so that it meets the pricing and the profitability framework. And I think one of the important points you made in your presentation out here really is that GCPL does not really believe in quality, irrespective of whatever happens, right? And that's an important ethos as far as the business is concerned. In this regard, do you think what you talked about, pricing and margin being a given, is still going to be relevant in your job at GCPL, or that principle has to totally go out of the window?
Yeah, no, I mean, Richard, listen, I think this is a general principle, which is when you're doing market development, you have to figure out what the consumer is going to pay. You got to figure out, you have to make a certain return on your capital and certain margin, and certainly you got to design the product that's right. But designing a product that's right for consumers does not, and I want to underscore, does not imply a reduction in quality. It just means understanding very, very deeply what that consumer who's not using really values and what she doesn't value, right? And different consumers value different things. So a high-income consumer may value something more, a low-income consumer may value something more and something less. And that goes back to the question of Percy, and this is the hard work. I think Arnab asked this question, which is, how quickly can we do this? When we unlock understanding what it is that the consumer who's not using it values and design for value, that's when we'll see explosive growth. It'll come from neither of the two, which is,
and this has also been a strength of GCPL. If you look at a Fast Card, you look at Expert Creme in Sachet, you look at Air Pocket, very good quality products, a lot of consumer delight, but at these accessible price points. So, this, I think, combining that with more of this market development and media investments is something that can be quite explosive.
Yeah, so I'd agree with that, Richard. I think it's a strong suit of the company to do, to figure out the price, to figure out the margin, and then design what's right for that consumer.
Got it. Thank you very much.
That was the last question. I think we can wind up. Thank you, everyone, for joining today's call. If there are any unanswered questions, we'll be happy to take them offline. Do reach out to the IR team. Stay safe, stay healthy. Thank you.
Thank you.
Thank you.
Thank you.